Okay, good morning, everyone. Good to be back. It is Wednesday, September 9th. Mike Boutros here with you for this live intraday strategy webinar on SB Trade Desk. Good to be with everyone here in the room. So, a lot to talk about as we get deeper into the month. Dale, Mario, Aurelian, Depeche, Eileen, Kelly, great to see all you guys here in the room. So, real quick, we will jump into a review of yesterday's intraday setups, and we'll talk about where we are. It's been a couple of days for September. We've obviously gotten that holiday weekend out of the way. Thin liquidity conditions are fading, and we're coming into some major event risk, i.e. later today, you have dollar CAD, which will be in focus as we head into the Bank of Canada interest rate decision at 10 a.m. Later tonight, you have the RBNZ interest rate decision. Haven't really touched Kiwi, guys, over the last, as you guys know, it's been a couple of weeks now, but we'll take a look at those levels. And then obviously, you still have further event risk later in the week from the U.S. with the Michigan consumer confidence. You have the BOE, which is not really expected to do much from the sterling, but we'll definitely look at some of those setups. Depeche says, hey, buddy, can you explain what's a flush trade and how the setup works out of curiosity? I'm not really sure what you mean by a flush trade, Depeche. If you want to give me some more background information on that. A lot of people will use that terminology when it's a wash, not a flush. So basically, if they get into the position, stops at break even, and they're trying to play the breakout or the press, if it doesn't, pan out or the market reverses, it'll be a flush, meaning it's a wash. It's a break even trade essentially, Depeche. I'm not sure if that's what you're referring to, but let me know. So before we get started, a quick look at the relative performance for the dollar. You have a split decision here. Kiwi, Swissy, Aussie with slight advances on the session. Yen lower by 0.87%. And dollar yen was obviously the first one on tap for yesterday's setup on the intraday chart. So let's jump right into that. A quick look at the dollar index continues to be pretty clean. The break above 12,000, what was it? Late last month or early in the month, 12,028 pressed us through. We've made a run on the highs for the August trade, which was 12,071. Remember, we talked about that last week. Here's the same slope for the structure that we were following off of the lows here. And if you take that to the reversal day that we made here on the 12th, you can see some really nice pivots off that. Comes in with an exact 236 of the basic advance off of last month's low. So near-term support there, break below it, you look for a move into 11,978. Near-term resistance is going to be right at the high day close. I'm not sure why that moved. Excuse me, high day close comes up here at 12,084. Okay, and that comes in line with a possible pitchfork or median line formation. It's too early to tell if this is any whatsoever helpful, but we'll leave it there as it coincides with that high day close for now. One thing I want to note on the dollar index, and guys, major event risk this month, I really cannot stress how paramount the interest rate decision from the Fed is going to be on the 17th, especially as you look through some bank research wires that we've been following and some of the broader institutions out there. There's still a lot of them calling for a Fed interest rate hike this month. I'm not really of the mindset that we'll see that in face of what we've seen in equity markets, what we're seeing in China, and obviously what's going on in Europe. But nonetheless, U.S. data has continued to be more or less where the Fed's looking. The natural rate of unemployment is essentially there at 5.1%. You can argue the participation rate all you want. And while I think that inevitably the inflation picture will really put the Fed on hold, we'll have to see how that pans out on the 17th. But with that in mind, the dollar index here setting up with a nice opening range for the month. We'll be watching this one very closely. All right, so let's jump into the dollar yen from yesterday's setup. Here's what the daily looks like. So dollar yen, if you've been following along, guys, on the intraday, we've been following this one for the last 3 weeks. As we started off the week, or as we came into yesterday's trade session, the major focus was this region right here. Remember, the bearish invalidation level was essentially right there to start off the week. And if that broke, we're going to be looking to buy pullbacks. And this is something else I just want to touch on real quick, guys. The swing side of trades were on the shorts for dollar yen. A lot of the times, 90% of the time, where Jamie or where the swing trade will have a stop is our bearish invalidation level or our bullish invalidation level, which means if you guys are in the swing and you get stopped out, now you have the opportunity to go ahead and press the long side of the trade. And that's exactly what happened here in dollar yen. We broke through confluence resistance. And once we did that, you're looking to buy pullbacks. You had a momentum trigger that had given out. And the major objective target was going to be that 200-day moving average right around 120.80. Here's what the intraday chart looked like yesterday as we were coming to test near-term resistance at 120.15. Here's what it looks like now. All right, so we broke through that 120.15 barrier. Initial targets were right here at the 120.52. That hit in early European trade. And then right on to the April highs, which comes in at 120.80, and that's sort of where we're trading right now. So the trade remains objectively constructive above that same region, which was our bearish invalidation level. Okay, that's now the bullish invalidation level. Subsequent targets to the upside, 121.37 and 121.73. So we're still looking to buy pullbacks here. I do think you get a little bit of a setback as you open up US trade. Here's the 5-minute chart looks like, by the way. For dollar yen. See if we can find any triggers on this. It's been a one-way trade, but yeah, it's going to be hard to find long triggers here as we open up US trade session, but we'll be looking for them. And if you look at the momentum signature since that low last night, you know, we've been very constructive. 40 hold, 70 break of resistance, 40 hold, another 70 test of resistance. So this is a very constructive signature, and we'll continue to look to buy pullbacks here. If the opening range for the US does set up with a nice hold above 120.80, which is that near-term support, okay, right here, look for that break to take a long position against that low. Again, next target would be 121.37. But pretty constructive here. Nothing's changed. The bearish invalidation, that level that has given out, really gives us validation to continue favoring the long side, looking at buy pullbacks in the dollar. Even though Mark says, well, we'll have to wait for the daily close. No, even though it does look bullish, Mark. Which question are you talking about there, Mark? On dollar yen? So he says yes. So for this breakout, sure, the close is going to be what's necessary to really validate the move above that median line. But when you've pressed this amount through, Mark, I tend to go with it. I tend to go with it. If we had broken through and failed or kind of hovered just above or below yesterday's highs, I'd be a little bit more concerned about, okay, let's wait to see the close. But with a run like this, right into the 200-day moving average and even overshooting it with what we're seeing in the dollar, you know, I still like it. One thing he says, yeah, it's a lot above there. One thing I do want to say, Mark, which kind of goes in line with what you're noting, is that we are still broadly in consolidation. Guys, everything we've seen subsequent to the spill last month is still essentially the hangover effect. Okay. When the market stretches, when you pull a rubber band, you let go, it takes a little bit for that rubber band to slowly start to shrink, right, before it starts to gain elasticity again. And it's exactly what's going on here. So I don't want to be positioning for a move into 121.80 or, you know, 122 yet. I don't want to be positioning for a move into 118 yet. Okay, we're playing the consolidation range on the back of the spillover, and that's it. From a scalping perspective, that's how we're treating dollar yen, and that's how we'll continue to treat it. You know, there's nothing to say that we don't get some price action into the close of US trade today that turned us bearish again. But as it stands right now, looking at the momentum signature, looking at the weekly opening range, looking at the daily structure, you know, you look for a little bit more of a stretch higher here, buying pullbacks above 120.15. Does that make sense? It says basically yen weakness across the board. Well, that is the case. Here's what it looks like if you want to look at just yen performance. Okay, and if we just look at yen performance, that's absolutely right, Mark. The yen is actually weaker against all its major counterparts. This is versus the yen. All right, so any questions on the dollar yen before we start to move off to the next sort of setup here? We'll come back to this before the end of the session. We'll see if we can get any triggers on the long side. You had a couple of opportunities in overnight trade. Here was one from Europe, 3-point trigger. That was beautiful. Here was one I was watching yesterday. In fact, yesterday on US Trade, I actually jumped into a beautiful short off of this trigger. And I do apologize yesterday, guys. We couldn't get the webinar up, but this was a nice trigger heading into Europe. After we opened up US Trade, this thing hovered, finally made it back below 60, and it was actually a really nice short entry. You're looking for about 43 pips. The entry was at 120. You dropped into 119.66, right shy of that, but really nice pullback to the downside. So there is opportunity to play. This was before we broke the bearish invalidation level. Now that we're back above it, that 120.15 barrier, you're looking for the long side. All right, let's move right along. Next up on tap is the dollar CAD. I highlighted this basic setup on Daily FX yesterday, but I really wanted to premise that this is just something that we want to keep in view as we head into the Bank of Canada interest rate decision. Not necessarily an operable scalp. By no means have I taken any positions on this yet, but the levels are like super clean here heading into the release. So here's what dollar CAD looks like on the daily chart. So the major levels that we're looking for is this. You have the reversal day close, which comes in at 32.88. If this median line structure is in play, that was a beautiful recovery and rebound off that. We've had 3 days now where we've reacted off that level. And just above that is the high day close at 133.35, and that's the invalidation level. Support, well, that's very clear. Here's your daily, the monthly open. It comes in at 131.38. A break below that, there's the major key support structure that would shift the broader bias to the downside for dollar CAD. So we're not really expecting any change from policy. Remember, the BOC has already cut interest rates twice this year. So obviously there's not much expectation that they're going to do much today, but it's going to be interesting to see what Carney's take is, what his tone is on the back of all these expectations from the Fed on the 17th. And if they continue to suggest, or if they specifically come out saying, look, we're independent of the Fed, we're going to do what policy we need to do here, or if there is any concern, or if there is any mention even to what the Fed is doing, you really could see some volatility here. So broadly speaking, I'm looking lower below 32.88. Okay, I'm looking lower below this region. If we break above here, I'm neutral, and this break above the high day close is what would put me bullish. If the initial reaction, or if the comments are rather hawkish and the initial reaction is for a rally, that might be a great opportunity against the weekly opening range high to get short. Here's what the intraday chart looks like. So we're all over the place since the start of the week. It's been pretty ugly, but as I noted in yesterday's piece, this is what's going to be our near-term bearish invalidation level. This is what will put us on the constructive side. Broadly speaking, I'm looking for short triggers while below this region. Okay, again, heading into the interest rate decision, if we blow through 32.88, forget it. Okay, it's very important to note that we're obviously in a strong uptrend. The reason that we are looking for possible weakness here is a couple of different things. I don't know if you guys caught the piece that Jamie put out on headline SB Trade Desk with regards to the oil CAD cross, and it's super interesting. And if we have put in some sort of near-term low in crude prices, then you would expect to see, either this week or next week, it's 1-2 week lag, CAD start to turn as well. So it's never going to be something that we're going to advocate trying to call the low, but just even in near-term price action, it leaves the pair vulnerable. So that's one of the main reasons that we're starting to look lower. Again, we're not trying to call the high here, but against 132.88, the risk is to the downside heading into the release. Key support, the 3062 region here, that confluence. Any questions on dollar CAD? And at 10 o'clock is the release, guys. Again, no change expected to the interest rate, to the headline rate, but the comments from Carney are really what are going to drive the CAD crosses here. And there are a lot of CAD crosses that are in view. I know a lot of you are looking at Aussie CAD. I know Jamie was talking to me about Aussie CAD yesterday as well. At these lows, made a nice little recovery right off the lows. Okay, almost to the pip that you made back here in 2013. And that recovery from a momentum standpoint coming into some near-term resistance as well. So Watch the CAD crosses as we head into that interest rate decision. Are there any questions on the dollar CAD setup specifically? Graham says Carney is governor of the BOE. Carney was governor of the BOE, right? Now he's the Canadian central banker, or he's the current Canadian. He's was the BOC. Now he's in the BOE. You're right, Graham. I'm sorry. I'm mixing up all my central bankers here. We'll take a look, Dan, at Aussie Yen. Excuse me, guys. One sec. Okay, sorry about that. I'm still getting over a little cold. All right, so moving right along into the sterling dollar. This is where Carney comes into play, and we'll be looking for his comments. Typically, the Bank of England doesn't even release a policy statement unless there's a change um, in policy. So we're obviously not expecting any change from policy from the BOE, but we'll be looking to see if any comments come out. The sterling is in a very interesting spot, and if you guys noticed on Sunday, I put it on the radar charts. Here's what we were looking at on Sunday. Basically, we were making it through the median line structure that dates back to the June highs, and that put into focus a target at 153.40, 153.30. And near term, for me, that was bearish invalidation, okay? Because the reaction that we got off this confluence support was pretty strong. On the close yesterday, momentum did make it well through back the 40 level in the RSI signature. So put us on the constructive side. We plowed right through 53.30, 53.40, and it keeps the near-term focus higher while we're in that range. Key resistance 54.50, essentially looking at 54.47, 54.60 here. A nice Fibonacci cluster. So since the Sunday open, or since the Monday post, I guess this was, Sunday was Memorial Day weekend, the break has further pushed through, and constructive above 53.40 is the play. Here's what it looked like last night, and here's what it looks like now. So resistance still 54.12, support still 53.35, 53.40. As we said, this is going to be near term where you're going to want to remain or look for support. Broader bullish invalidation takes you below 52.65. So if we break below this, I'm going to be neutral. This is where I'd be looking for long entry again. If we break below this, you're looking at the continuation of the breakdown. The thing with the pound is this, guys. The dollar has event risk into Friday. Obviously, the BOE is on tap, so you might get a double whammy on that front. But it's basically still a range, okay? Below 54.50, I'm not really looking to play any aggressive long trades. Keep in mind, the momentum signature turned pretty bearish with the move that we made last month, okay? Some divergence into the highs. We talked about that. Break below 50, hold at 60, and this is the first 40 break from above 60 that we've seen since way back here. We noted this, last month. Obviously, that was the onset of a way much deeper pullback in the trade, or in the pair rather. So just looking at this objectively from the momentum signature, the broader trade does look at risk for further downside. Near term, intraday, you want to be looking for support, possible long exposure while above this region. As we get into 54.50, 54.60, again, major area of pivot resistance. 618 retracement from the advance off the June lows. It's a 618 extension from the decline off the lows that we put in June and August. And objectively, a nice, really strong pivot in price over the last few months. So that'd be the next subjective target to the upside if we break, or if we get some long triggers, which there is one pending right here. So taking the high in price, That'd probably be the most effective trigger there. And let's also check out the 5-minute here and see if there's anything worthwhile on the pound. Okay, we're at a shortage of long triggers here. So again, we'll have to wait to see if we get a high that we can connect a trigger off there and see if we can get the play. But objectively speaking, still looking for a pullback here to get us back on the long side. And now that we've made this turn, sorry guys, I'm going on the fly here. Let me just check this out. A quick retracement, see if any of these line up. Okay. Just some reference points there for us to watch if we get the pullback for possible long entries. You know what? I wouldn't even stress that 38 too. Mark says, hi, I think the whole world has a cold. Yeah, I think, well, it's ridiculous weather here in New York. It's like super muggy and then it gets cold, then it gets hot. So not surprised. Any questions on sterling here before we move off? Okay. So I want to jump into as many questions as you guys have. Before we do, the last setup I just wanted to review really quick was on the radar charts last night. Really interested in this. If you guys recall, a few weeks ago on the 28th, I tried to mark it for you there. We talked about this setup on the euro yen, and it's really coming into an area now of great interest. We made a break of that crazy slope that we've talked about for a while. So here's what the daily chart looks like. Here's what we looked like last night. The 135 handle, excuse me, was really the objective resistance that we were looking for, and that's exactly where this thing capped out. 135.02 was the high. Near term, do think you can get some pullback, but the reaction that we got here at Confluence support was pretty strong. Momentum right back above 40, very similar to what we were looking at on that setup we just talked about for, what was that? The sterling, right, on the rebound. So looking for near-term resistance, a pullback here. Here's what the scalp looked like last night, and here's what we look like now. So a quick zoom out here. If you guys remember, we talked about this specific slope defining the last 6 corrections here in euro yen, meaning on every rally, the corrective play below the slope invalidated with that break. If you take that initial slope and mirror it, every time we corrected lower, once that slope broke, you made the run. Slope broke, checked it as support, made the run. Slope broke, checked it as support, made the run, and so forth, right? That slope has held now for almost 3 weeks. This is the 3rd week, and here's the break. Okay, so objectively, if we just look back at price action, we'll be looking for a break here. Dale's saying there's no sound, guys. Are we good on sound? Could I just get some confirmation? Sound is good, says Dan. Thanks, I appreciate that, Dan. AV is perfect. All right, might be just an issue with Dale's. Okay, thanks, guys. Appreciate that. But objectively speaking, now that we've broken this slope, we're looking higher. Near-term support and key support, and what I'm going to call the bullish invalidation level right now is going to be right there at 133.80, 133.84. Near-term resistance right at 134.80. A break above this, we're still looking for a stretch into that 35.60 region, which is going to complete a 2618 extension off the low and a nice even 50% retracement of the decline from the highs. So immediate resistance is here. You are getting some divergence, into the highs. You could get a spill back. Remember, the last four or last six times, of the last six times, three of them came to test it as support. So here's the first break, here's the second break, here's the third break. We tested as support before we moved off. Fourth break, tested as support twice before we moved off. Every other break has been a run. So the risk here for a spill back into 133, 80, 134 handle is there. Objectively, we're going to remain constructive above this region, looking to buy pullbacks. So euro yen, another one with the yen, weakness that we've been seeing, might be a beautiful play here. Haven't gotten an opportunity to actually take a long scalp on it, although there were a few triggers that gave out yesterday. I was really kind of fixated on this to see if this was legit or not. And as we came into the open of Asia trade, it was pretty clear that we were going to make that run. So constructive above 33.80. Break above 34.80, looks for a drive into 35.60. A little bit of a smaller ATR, actually. If you look at the dollar yen, the ATR on dollar yen is like 42 pips. Euro yen, a little bit tighter here at 33 per scalp, but levels look really, really good. And that 35.80 level, guys, that we just talked about, also on the daily chart, a massive, massive level, okay? Not only is it the monthly open, okay, but you also have just above that into 36, 35.90, 36 is the 200-day moving average, the 100-day moving average, and the median line structure off the yearly lows. Okay, there is a sliding parallel that comes just ahead of that, and that's right around 135.70, but highlighting this whole region, 135.60 into the 135.90 level, as really critical resistance for euro yen. As far as the scalps are concerned, longs, that's the objective target. As far as the broader turn from a swing trade perspective, might be an opportunity to look at some short exposure once we get up there. Eileen's saying these ATRs on the majors like the exotics just a while ago, right? And again, it's getting quite interesting as the ATRs start to blow out on some of the exotics, or the vice versa. The dollar ATR is starting to blow out and the exotics starting to tighten. Really shifting the focus. And again, I'm not surprised ahead of the Fed. Really not surprised. All right, so those are the objective setups that I'm following. Sorry, it took me a little bit to get back in the groove of things here, guys, but I want to leave some time for your questions. So let me know what pairs you're looking at, any specifics. Make or break today, says Mark Haverman for Dollar Cat. I agree with you on that. Dan wants to look at Aussie Yen, and let's do that. Aussie Yen. Okay, not really a trade I've been focused on very, very closely. I know that Jamie's been all over this. I've kind of been shying away from the Aussie versus the yen just because the yen weakness that we're seeing now in combination with the Aussie trade, which I'm very uncomfortable with, generally speaking, has kind of kept me on the sidelines for Aussie yen. But we can take a look. Give me one sec. Okay, so here's the near-term chart for Aussie yen, is what I wanted to bring up. This is a quick look at the weekly chart, okay? And the weekly chart certainly has a basic trendline support from 2009 that gave out earlier last month. The break of the yearly opening range shifts the bias to the downside, and you've now made it below that 2011 high. I mean, if this is in play, which the slope has defined price pretty decent, you still have a ways to go to the downside. In fact, a basic extension off the highs here would probably serve us well. Ugh, really messy. Okay. Sorry, Dan, I'm just going right off the cuff here. I want to see if there's anything major that caught this low, which it doesn't seem like there is. Probably a near-term structure. All right. So these are sort of the levels I would be looking at, broadly speaking. This is a weekly chart, mind you. I'm just going from the top down because, again, Dan, I haven't really followed this, so I just want to take it through one step at a time. So for the Aussie Yen, and I know, Hamid, you're looking at the same thing. This is sort of the major range that you're looking at from a weekly standpoint. I still think that you have a big risk for a drop into at least the 80 handle. The bearish invalidation level, unfortunately, needs to be all the way up towards 89.80, the 90 region. So you're looking at a massive, massive topside play, or a massive, massive range, rather, that you could possibly be in for the next couple of weeks. So I just want to caution you on that. Also, the ATR much larger than what we're looking at in the dollar crosses. So you're looking at a daily basis about 167 pips. That said, here's what the intraday looks like. Let's see what we got going on. Here's your weekly open. Messy trigger, but you're getting some divergence into the high. So you might be getting some waning some waning momentum here, an exhaustion trade soon that might pull this back. But I don't really have a setup, and that's the thing for both of you, Dan and Hamid. You know, it's not just about knowing the direction. I would say near term, yeah, you're at risk for a rip higher a little bit, but you know, what's the setup? I don't know. Where do you put your stop here? If anything, you would put it below 84.60 from a scalping standpoint, but even that is not going to be really well defined. The only reason I would say that would be acceptable is just because that's going to be the opening range low for Europe, but that puts your range a little bit larger than the ATR you're looking for, which is about 42 pips. So keep that in mind, guys. I mean, it's all about the setup, right? It's not just about the directional bias. Broader, longer term, I think you go lower. I think that's pretty clear, both from momentum that we're seeing on the daily. Near term, medium term, it's at risk for a rip higher. Again, the daily is putting in some divergence into the lows. If you get a 40 break to the upside, yeah, you could see this thing right back into 86 even. But I'd be looking to use that rally to possibly get back on the short side instead of looking to necessarily try to play the rally to the upside. Does that make sense for Dan and Hamid on Aussie Yen? Dan says, I thought Aussie Yen maybe more of a swing. Just wanted to confirm. Thanks, sir. I was looking for short around 86. I mean, if you're looking for 86, then we're on the same page. 86 was such a big region, Dan. Huge, man. Not only looking at the 2013 lows, but you're also looking at a 618 basic retracement. You're looking at a longer dated 38.2. This one goes all the way back to, geez, I can't even remember. Hold on. To the lows from 2009, late 2008. So there's a huge, huge structure there for sure. It's just whether we make it that high, you know, and I wouldn't objectively sell there. I'd still be looking for turnover and momentum, something to wane, because that weekly chart, I mean, if this doesn't scare you from trying to call, um, you know, a low on this, I don't know what would. So just keep it in mind. broadly speaking, near term, the rally might offer some really nice shorts. All right. Any other questions on Aussie Yen before we move off? I wish I had a little bit more conviction on this one, guys, but near-term price action is going to have to give us a little bit more, I think, before we can get really comfortable trying to get any real plays on this one. Mark Haverman, dare I ask about sterling yen? Looking for 186 shorts. Let's take a look at sterling yen. All right, do need to update this chart as well, so bear with me. Okay, so before we jump into the 30-minute chart, here's what I want to say about that setup that you're talking about here, Mark. He says, caught some pips on the upside, want to risk them short now. So, Mark, here's what I would say on this. A couple things I just want to note. You made it back above that 50%. 85.30 was a pretty big range for me. Why? Because it was the initial open for the year comes in right here, right? Just above that 86 level that you're looking at. But more importantly, that swing that you made for the initial January, February stretch comes right alongside basically the 50% retracement, which was the close low for July and the close low that we made here before the inevitable break on that massive September 1st open. So let me drop the marker there too. So my point being, I think you can get a little bit more upside stretch here before you start to get back on the short side. Remember, if we just look at relative performance here, Mark, today, you're looking at the sterling, which is obviously making a topside stretch. You're looking at the yen, which is getting a lot of weakness across the board. So you're kind of fighting an uphill battle here. I would need to see a little bit more of a conviction hold, that momentum coming into 50, or at least giving us a turn before we start to fight it. Long story short, this is a much more interesting area for me if we blow through 86. And I hate to highlight such a huge range, but this retracement that you're looking at here in gray defines the entire 2015 calendar year. So this is the retracement for the 2015 range. The 50% has been compromised. At 38.2 of just the most recent drop gets you 86. Let's look at this in near term. I tried this yesterday, yeah. That already broke. That already broke. Waning momentum into the highs. Support trigger. No support triggers yet. My only problem is this, Mark. You're looking at that from a swing trade, I'm assuming. What would be your stop? If you're going to look at next or last week's highs, 87.55 would be the only thing that makes sense to me, and that's quite a range. You know, from a scalping standpoint, obviously it's way blown out, but actually that puts you in 61 pips. Could be a decent play. Also looks like you could have a third wave. Could be a decent play. Could be a decent play. Let me bring this up on the 5 minute. He says swing, stop about 200 pips. Yeah, so that would be a little bit too large for the intraday type of strategy. By the way, guys, don't forget that Jamie will be on at 1 p.m. today with the midweek strategy webinar. And some divergence into the highs. Actually, this looks pretty good. We'll leave this here on the screen as we get into just ahead of the U.S. Open. That actually might be a nice entry, guys, for a near-term setup, just for a scalp on sterling yen. Wider range scalp, again, keeping in mind 60 pips is what you're looking at basically on the intraday. But we'll keep that in view. Any questions on sterling yen before we move off? He says, thank you, sir. Yeah, you're more than welcome. Anytime. There was, who asked that earlier today? In any event, there was someone who asked about the S&P 500. Here's what the S&P, the chart that I have, and we're coming in some resistance. I know that's like silly to say because this thing keeps ripping, but here's what we're looking at with this SPOOS. So, well, we're making our way through it right now. Here's the confluence resistance that we were looking at yesterday. And basically, you're looking at the 50% retracement. This is off the advance from the lows that you made from October of last year into the highs for this year, which coincided, again, with the lower median line parallel. We just blasted through that. You're now testing that swing high, 1995. Watch the close here today. It's really, really important. Watch the close here today. If we do blast through it, you're looking for that median line again. That could take you as high as 2035, 2030 would be like your first target on the upside stretch there if we break. But I do think it's at risk here. I do think you're at risk here. Very similar to what we were talking about. Okay, this is still the hangover. Still the stretch, snap back, and here's the consolidation before you start to make your next move. So this back and forth, you have to be super nimble on. You have to be super nimble. Look at crude. Here's the crude prices that we were talking about, major support, and what we want to see hold to help us further give justification or conviction on the dollar CAD turnaround would be a hold above 43.58, 43.52. As long as trade holds above this, is from crude standpoint, it further supports the case that we may see a topside stretch in the CAD, which is dollar CAD lower. Okay, what do you think on the grandfather trade, says Dan? We'll definitely take a look at Euro pound. It's funny that I know exactly what you're talking about, right? Everyone's calling it grandpa now. Here's what the grandpa trade looks like to me, man. Dan, I think we just broke support. I was looking at this last night. I wanted to put on the radar charts, but we were kind of hovering right there, and I didn't know what this thing was going to do. I still think you pull into the 50% retracement. Let me bring the I don't know why this is not right location. From the advance off last month's low, and that basically takes you 71.84. Waning divergence divergence as far as waning momentum into the highs, trigger break. Yeah, you might be ready to do something. I don't think it's quite there yet. I think you're coming into some support. I wouldn't be surprised if the 38.2 was right there. So I think you're coming into some support. Remember that the slope lines that we've covered in this that lasted for like 2.5 years? That same slope support turned resistance, now support. That's sort of what I'm looking at to see if we can find some basing here. The momentum signature here also has shifted. So from, multiple years, I feel like 60 hold, 40 break, 60 hold, 30 break, 60 hold, 30 break, 60 hold, 40 is holding. Now here's the first meaningful advance above 60 in momentum. So the broader turn here might be in play. I do think you can get a pull lower here. Now that we made it back below that median line, the risk really is for a much steeper drop, but broader terms, you'd be looking to buy that. Broader terms, you'd be looking to buy that. Look for near-term support at 72.40 on this one, Dan. So here's the setup that we were following last week. A little delayed there, but we did get that target at 72.65, and the lows have been tested. And those are the amended levels. Those are the amended levels I'd be working with. It's right at support. You're right there, Dan. You're right there. If it breaks 72.40, you got a soft target at 72.20. I really wouldn't stress that too much. I think that's just swing high from early July. Yeah, it is a swing high from early July. So if you get a break below 72.40, I'd hold on to that to 72.20. This is going to be the next excuse me. This is going to be the next near-term confluence region you're going to want to watch. The structure seems to be defining price pretty nicely, actually. So the 50% of the advance off the August low comes in at 71.84, and I think that's going to be a little bit more of a critical level. He says, I'm short from 73.50 and 73.20. Was looking to close and possibly flip soon. Thanks again. Dan, great entries, man. Beautiful. I would be looking to possibly, from a scalping standpoint, right? I can't really get you from an intraday standpoint. What I'd be looking to clean up some here, maybe reduce exposure, stops to break even or above that swing high from Asia. And you look for a drop into 72.20, subsequent 71.80. Nice trade, man. Well done. Kelly, always a pleasure. I will see you soon. Dan, hope that helps on Euro Pound. He says, thanks again. You're more than welcome. You got me interested in Grandpa Trade now. We'll be watching this one all day today. That's a big level. That's a big level. Okay, quick note, guys. I do also want to remind everyone, I know we've been talking about it for a couple of months now, but we do have IDO ready to launch and coming on board within the next week or so here. So just a quick reminder, all current subscribers will be grandfathered into that service. It will be an additional cost for new subscribers who are coming into SB for SB Premium. But everyone who's currently subscribed, meaning everyone here in the room today, will be upgraded to SB Premium, grandfathered in free of charge, so you'll have full access to the IDO search engine. It's really cool. It's a nice tool that we've been working with. We've been working with them for quite some time, ready to get the launch good to go. But it is essentially a terminal, guys, that tells us and helps us ascertain where we want to be focusing our attention, biggest movers. Also helps us get a gauge of what the historic values have been. So last time we saw, this X price action in the SPX, what was the average gain? What was the average loss? What was the average up? What was the average down? It's a very cool tool. Jamie's working on some material right now to help you guys sort of get through the beginning as the learning curve starts to ramp up, and how we can use this in our trading, not only necessarily to give us a trade, guys, right? It's not going to be, hey, go long euro now, but help us with our entries, help us with our exits, and steer our attentions to where we might want to be paying a little bit more credence. So I'm really excited about this. Again, we'll have more information on this and more educational material once that is ready to go. but I do want to remind everyone you all will have full access. So look forward to that, and I'll keep you updated. Aline says, wow, very cool. Thanks for the premium inclusion. Mario says, thank you very much. Oh, wow, equities too. Mark Haverman says, yeah, they do have some equities on there as well. There's going to be a watch list, which will be, more so the major currencies that we're following, average return, average up, average down, how many times or how many matches we've seen. You have also the date or length of time of which you want to do the analysis. So really cool stuff, guys. Really cool stuff. And again, we'll have more information on that. All right, so if there are no other questions, I'm going to run. Watch the BOC, 10 o'clock. Keep your eye on that dollar CAD. Again, I'm not in anything right now on dollar CAD, but I will be looking for a break of that key range. And we'll be looking to see if we have anything, to give us a break of that monthly opening range, which is holding just below the reversal day close from last week. And dollar yen, that's the other one that we'll be really, really focused on. Sterling, I'm a little bit hesitant on until we get into the BOE, although I don't expect much. But the dollar yen, again, still looking for that stretch into 21.37, 21.70 being that big area of resistance. All right, guys, best of luck to your trading. Again, Jamie will be up at 1 p.m. Till then, best of luck. See you tomorrow. Cheers.